Hello, everybody. Happy Thursday tonight, and we're going to look at some charts together. It's a good day. I was just glancing at the screen over here. Even though the NQ is up 100 points, every single one of my shorts is in the red, which is cool. That's how I like it. So defy gravity here, folks. A lot of earnings last night, a lot of action from that. Tonight, kind of boring, just Intel. Kind of has been washed up from 1999. That's about all we've got. But next week, we've got a lot of stuff there as well. I've got a fair number of charts to show, so let's jump in. We begin with a spider, which, goodness gracious, a lifetime high. How about that? Who'd ever thought? It just keeps tromping higher day after day after day after day after day. And yet another green bar. One day this will end. It's very hard to know when, right? I mentioned the Indu yesterday by way of the Diamond ETF. I'd said, even though the Diamond was at a lifetime high, I wasn't sure about the Indu. And that was right. The Indu isn't quite at a lifetime high. It is very close. The peak was way back in December, on December 4. We got exceptionally close to that on the 31st of January. And we are as close as we've been since then today. But for the moment, it's just kind of a triple top until such time, should it happen, that we zip past that 45,073.63 level. So there it says, not quite lifetime high, but awfully close. And of aid to the bulls continues to be the most persistently supported sector, thanks to the government. Financials, XLF, the banks will never be allowed to fail. Here's XLF at a lifetime high on both an intraday and almost certainly a closing basis. So the banks are doing just fine, and which is why we're $37 trillion in debt. So congratulations. China, I've decided to short. This trend line is just too tempting. It's not a huge position, and it's a pretty liberal stop loss. This line right here, I think about 40 is a fat enough range to not get zapped out prematurely. But not only is it the basis for this top here, but it also just happens to align nicely with the intersection of that trend line. And this trend line I keep referring to basically extends for the entire history of the financial instrument FXI, and we're getting very close to it now. So shorted FXI today with a stop at around 40. Small caps are down more than 1%, which I appreciate. We have pushed yesterday to the highest recovery level since the plunge took place. We are well below lifetime highs. In this instance, the lifetime high was around 243. We're trading around 224 now. So that's something like 10%, something close to that. And so sticking with that short, and it's exhibiting some very, very richly appreciated weakness today. As far as those earnings last night, a lot of dynamism. In some cases, it would explode higher than collapse or vice versa. A lot of fake outs going on. But let's thumb through the four big ones. ServiceNow, which is NOW, has been persistently strong. It had a report that the bulls cheered. It opened strong. It's still up, although it has been selling off all day. The peak today was over $1,000, up at 1050. We're in the triple digits again. It sunk from 1050 to 991. So a good day, a green day, but not what they were really hoping for, because it was much stronger early on. Alphabet, GOOGL. This one also opened quite strong. It is not at lifetime highs. It did not even manage to seal its price gap from the day after its lifetime high, and it's been selling off all day as well. So, the NASDAQ's still up, as I said, triple digits right now, but Google is not helping as much as it had earlier. Tesla is down hard. After the report and after the earnings call, it was very robust, very stable. It was down maybe $1, maybe $1.50. I guess it started to sink in, and people have been dumping it. So we're down about 8%, around $26. Our old friend, the Fibonacci, though, is still doing his job. I'm referring to these two lines right here. And you can see that, just imagine this being kind of the goal. those lines. So it's just wild movements here, wild, and from wild to mild. It gets milder and milder and milder, and then it's kind of found a happy equilibrium at our old friend the Fibs, which act like a magnet for this thing. So we're going to be hanging out around $300 or so after that dump. And then one last one, which I've been pretty persistently bearish upon, although it's not a great pattern, was IBM. And IBM had a lifetime high back not too long ago, about a month ago or to the day, and it fell hard today. At one point today, it was trading the same level it traded in January. So half a year of progress undone. And my only bearishness on this was related to the fact that I have kind of an analog going here. Had a nice bullish base, long rally, and then it fell to pieces. And there's another big bullish base, long rally, and it seems to me that the falling to pieces part has begun. But these things can take months to unwind. I think the big quick move is today. If, we're one short, I think now would be not a bad time to cover. Although I would have said the same thing about CNC, and that just is falling day after day after day after day. So some stocks are just kind of fated to crumble for a long time. But this was a sudden drop, and I imagine it will try to recover in the weeks ahead. Over in quantum land, always interesting, QBTS, which is sort of my favorite, is down just a little. It's off about 1%. But its compadre is not doing so well. Quantum computing QUBT is down about twice that much, 2.09%. And I noticed, interestingly, hadn't really seen this before on Rigetti computing. It also has a nice price gap like so, 17.55 right there. There's the gap. And we seal it almost to the penny a couple of days back. And now we're sort of stuck under that zone. But with, on the heels of Texas Instruments yesterday, that big tumble, NVIDIA still doesn't care. NVIDIA continues to push higher, almost certainly another lifetime high close. And yeah, there it is up there. So pushing to levels never seen before and well above $4 trillion. In contrast to this, on semiconductor, which did feel the heat from TXN yesterday, is falling more. This is down 7.31%. And I've mentioned this a bunch of times because of this pretty well-formed top. It's not squeaky clean. I'd give it about a B- or so, but it's finally doing its job. XME, the metals miner, finally falling after notching up lifetime highs recently. The peak was yesterday, and it slipped some today, so we've undone yesterday. We're pushing into Tuesday's action here, and this doesn't get interesting until and unless we crack below this blue line. I went ahead and shorted this earlier today, and we'll see. This has been a very sharp ascent. I mean, we're looking at decades of data here, and you can see this is just like a virtually vertical push higher. And I won't show it again because I've shown it so many times, but the XME GDX ratio chart strongly suggests if there was a pairs trade, be bearish on XME and bullish on GDX, the pure precious metals miners. As far as some short positions here and there, just kind of a mishmash to thumb through, some interesting things going on. BP, British Petroleum, you've seen this before. We've got a whole series of reversal patterns here. This one seems to be still in play. I've got to stop, as usual, at that dash red line. Carnival, CCL, another dash red line right there. We got very close to this recovery peak, and we're weakening away from that a little bit. 31.52, so short CCL. Core Weave, I've mentioned this cute little rounded top here. This is a very young chart, hasn't been around, but for, a couple of months or so. It doesn't look very dramatic, but it's already lost a third of its value, and this is not a happy looking chart. This looks very prone to future weakness. Carvana, CVNA, turning south. I appreciate that too. Tighten up the stop like so, and we're down today, lowest we've been in a couple of weeks, so we've lost almost 4% on Carvana. RH, better known as Restoration Hardware, this is down almost 4%. And I probably, if this keeps slipping, I'll probably want to tighten that stop up. That's a really loose stop, but that's moving the right way. Dick's Sporting Goods, DKS, down about 2%. Here we also have an incomplete topping pattern, but I'm using this dashed red line here as a stop loss. FMC, which I think is a defense manufacturer, and we've got an enormous top on this one, and we're turning away from this dashed red line here, which is my stop on that one. A couple more. Hims and Hers Help, HIMS. This one rallied mightily yesterday, and the stop on this one, I would say, is this gap at 61.52. Tiny position on this because this is a very volatile creature. So this is, by far my smallest position, but just kind of for fun. And then one other one, not very heavily traded, but I really like this reversal pattern. JB Hunt Transport Services, JBHT. There's the top right there. And I've tightened up the stop on this one a little bit to 154.72. Ooh-wee. This is weird. I've got like 2 minutes left and only a couple of symbols. Geez, maybe I should tell you like a little bit about my childhood or something. Usually it's just a mad rush. Anyway, a couple of more charts to glance at. Here are the cubes. Now, since we have the luxury of time, I'll just say a few things. The cubes, which back in the day was QQQQ, but now it's triple Q. These were introduced back in the final year of the internet bubble. And so these peaked here, and the internet bubble itself, the top is illustrated here, which was followed by a collapse. Now, considering the everything bubble we've had, this is just like, a wart on a mouse. It's like nothing. But this was at the time calamitous. And I remember, there were books printed about, I forget the exact figure, was like $3 trillion bear market, which these days, like one stock is worth more than $3 trillion. So, but they were talking about the entire loss from all stocks everywhere. But that was the bear market, and we had a bullish base established here back in 2002. And it was a pretty good rally from that. Then the real bullish base was established after the housing bubble right here, and it's been up ever since. I mean, this was transformative. We are at another lifetime high today on this, and just up it goes above the trend line, and there's nothing bearish about this chart, except that it's really, 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 really high. There's no pattern, there's no reversal, there's no trend line break, there's no nothing. There's nothing bearish about this chart. It's just extremely expensive. Intel, I don't think, will be neither here nor there with respect to affecting anything. This was the NVIDIA of its day. That ended back in 2000, and since then it's just kind of slogged along. And more recently, for the past year solid, it has been basically a $23 stock plus or minus a couple of bucks. It is boring. And I suspect it'll be so after hours too, but that's the only big one this afternoon. Now it's the bottom of the hour. So I shall say farewell. We'll wrap up the week tomorrow.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.